Hello, this is Vance, and this is Monday, November the 28th, 2016. And these are the CL trades for today using the slow hand method for price action. There's a lot of trades today. Well, there's a lot of movement today, and I'll tell you why. My thoughts on that subject. After Friday, last week was a slow week. It was the holiday week here in the U.S., or in the U.S., I mean. And so there wasn't any trading. The market was really closed on Thursday. No trading on Thursday. I wouldn't say it was closed. It was just no trading on Thursday. And on Friday, despite the fact that the market was open in New York, it's still very slow. And so it's just worthwhile not to trade. I didn't either Thursday or Friday of last week. Now, it does a couple of things. It really pent up demand, and of course, as soon as Monday would open, you'd think that everyone that was away for the weekend were back at it right away. That was part of it. The other thing was that on Friday there's the OPEC meeting is this Wednesday, November the 30th, and it's at that meeting that there is speculation that OPEC is going to try to have some production cuts to buoy up the price of oil. Well, whether that's going to take place or not, you have to get those countries to agree, and Iran and Iraq and Saudi Arabia, there's some disagreement about whether they're going to freeze, whether they're not going to freeze. Russia's got in there as well, and they've got some things to say about it. However, it seems to be up in the air. Now, why is that important? It's important because it really it makes the price of oil more volatile with a news event that's an expected big news event. This is a pretty big news event. So naturally, when there's news events, what you'll see on the CL is that the moves will take place, but they'll take place in a shorter period of time. So you'll see a lot more movement in the market, much more volatility. The other thing is, so when news event came out saying that Saudi Arabia was not going to participate, or they're going home, or something along those lines, the price of oil overnight dropped from on Friday, and subsequently immediately dropped last night when the market opened on Sunday night. Now, it didn't last long, because shortly thereafter, Iran made the announcement that they would not cut production, and Iraq made the recommendation that they would. So that really whipsawed the price of oil. So overnight, the price of oil went up over $1. And that doesn't happen very often. So when you take a look at the chart, and this is the 800 tick chart, overnight, you see that the low, well, this is from yesterday. The market's already opened. It's already taken off. But the price of oil had dropped overnight to as low as 46.76. And you can see all this movement. This is 800 tick chart. But look at all the action that was taking place in the overnight. And when price approached the 9 o'clock open, and it's right here, it had... right 9 a.m. you can see what this significant movement that took place overnight, just prior, roughly an hour before the open. And we had really kind of a pullback, so it kind of was like a spike in channel overnight, and then we had another push up later on in the day. So price move up to almost 47.65, way off the low of from below $45, and so, or close to $45 barrel. Oops, a little too far. Right here. So here is the low of actually 45.75, or 45.15. Pardon me. So 45.15, almost $45. Price moved up, so it was a pretty big movement, and a lot of this took place overnight. So why is that important? Now that I've gone this rambling explanation about all this, it's important because it's good to remember that from a contextual standpoint, when you're looking at trading oil with all that movement and all that information. Now, we don't trade on that. We trade, just watch the price action. But you have to be aware that when movements will take place, it might take place longer because of the jitteriness or the nervousness or the anxiety that's naturally built into the market because of what had happened overnight and because of the expected news this week. So that is something to really keep in mind. Therefore, when you're looking at placing trades using the slow hand method, when you're looking at second entries or something along those lines, just keep that the aspect of targets in mind and be more careful as far as trade placement. Not that you're always not careful with trade placement, but it's something to really to sharpen it, be more attenuated to it. Now, this morning, first trade that I really saw was really a short, and price had gone up. This is at the high, so you think that once price made this high this morning, that is it going to pull back? Well, it'll pull back down to this area. Well, it'll retest the previous area. Now, again, the magnitude was so high and it ran up so quickly that at least it might take a portion of it back. And that's why this first trade is right here. It's not a second entry, but it's more along the lines of thing is that price hits this double top and then immediately fails. So you could, from in max language, you could say it's a failed second entry long that turned into a really a second entry short. Now, you don't see the actual second entry. You see price gets to a low here. First pullback fails, second pullback, and then it fails. So it's not really a second entry as far as the rules are determined, but really two pullbacks to an area of resistance. That's really it. So that's why I marked it in green. So it's really from off of here, it's really just only a first entry. But price fails down. You think this is going to maybe have some hesitation where we had this capitulation to the left side of the chart, but you can see the price really moved its way on down there a little bit further, but then it started to stack up. This is a second entry long right here. New high, first entry, second entry. Broke the channel. I marked it in green only because whether or not it's going to retrace the entire way, we'll have to see. Now, whether depending where you got in, if you got in right on the close or if you were able to kind of limit in, you probably got your 15 ticks on before it pulled back. Now, had you put your stop right here at your 15 ticks and left it on, it would have eventually worked out. Here's another entry right here. It's not really a second entry, but it's more along the lines of off the double bottom here. So you have this double bottom right here. Price moves up, pulls back down here is a double bottom and another double bottom. So you could play it from that perspective, thinking that it's got enough room to get out here and at least be safe as far as 10 ticks are concerned. But I see it move this way up and actually went to where these previous double tops were before it was, again, it made price met resistance. Pulls back the first time, fails. Second time, second entry long off of here. Now I marked this one in, maybe I should mark it in green, but I'm looking for a measured move here. And the measured move is that once the price comes up here, we'll see first pullback, second pullback, and if you look at the measurement from here, somewhere in this neighborhood or this here, it's almost it didn't quite get there, but you can see you got to think that we're going to be really testing this top again, and we did until we had another pullback. Here's a second entry short. Now, whether you take this trade or not off of this, again, we don't know where prices get. You think it's going to be heading, maybe retesting this area. Took a while to cut down here. As first it came down, and you could, if you held on to this trade and got into this trade, you could rode it down to here. Pulls back. Here's another second entry long right here. First pullback, second pullback. Now again, do we take this trade? I didn't. Again, I wasn't really thinking about it from this perspective. I don't know why I was. I should mark it actually. Let me just mark that. Now that I look at it, it's a better setup than I anticipated for a couple of reasons. Number one is a second entry first pullback, price pulls back the first time, fails. Second time fails. A pretty strong bar coming out of here. Disadvantage is below the EMA where it closes, and here's the double top right here. There's where the previous high was. It's not quite enough room to get out, as you can see. But here's the area of capitulation that we had earlier in the day. You can see these areas here. So, and price when it gets down there, it immediately fails. So again, you could have used this as your target, and it would have worked out in that regard. But then from here, we have another breakdown. And price moves down and makes another move. So now you have to really kind of consider this is the second leg of a measured move down here. Here's your first leg. First pullback, second pullback, and looking at for maybe taking a trade here. But that doesn't really set up a real good second entry until we get a real close and confirmation we're down here. See, first entry. Here's the second entry, but it's not a really good bar on this little doji. Comes down to here, and then when bar closes, it's a long ways down. And so if it bounces in these areas, you really don't have quite enough room to get out. It's really close, but as you can see, price really did break down significantly until it reached this bottom. Now, when price gets to this bottom and retests and comes close to where, see, it's not even close to where the retest is. I mean, from this morning, we've had in the overnight price was way down at 45, the 45.15 mark. We're only down at 46.59, so you probably got another dollar to go, dollar and change to go. But you do have this capitulation to the left. So whether or not you're looking at this is a range or not, and this is what it really turned out to. Price spiked up. It's really like a channel that through here. And if we extend these areas, you can see where the resistance, the upper level of the resistance are. And we could say that the bottom level is probably somewhere around here. We're from left-hand side of the chart, somewhere in that neighborhood. You can see kind of stacked up. We didn't quite get down to these areas here, but you can see it just kind of overshot here. And in max language, you probably expect it to overshoot the other side as well. So on this way up, as price is approaching where the overnight, where the daily high has been, you get it develops into a nice little trend. A couple of pullback, a couple of areas to get in here is first pullback, second pullback, room to get out. And now once you've got to this area, there's another one where you think you're going to retest where the daily highs were. You can see that one, and there you go, right to the rest of the day. Now, there wasn't really a lot more after that. This is noon. You can see that price is kind of trading off down there, and really at the upper level of this range continued on. So there was quite a bit of action, and again, it comes down to the fact that there's probably because of the holiday weekend, first back on Monday, and the announcements that things are going to be probably taking place as far as the oil OPEC meeting on Wednesday, which caused a lot of this issue. So just a few quick trades to kind of show you what the movement is. Now, remember, this unfolded very quickly today. It was, hopefully that you kind of got on top of it. But today's like these can be challenging in some respects. But days like this is where you have to really be quick for your second entries, but more importantly, you have to use some of the other parameters with the slow hand method. You have to look at areas of resistance to the left or areas of resistance and support, and draw your trend lines and draw the ranges on your chart so you have a better idea of anticipating when price revisits those areas for optimum entries. And I guess that's it. I'm not going to go into a lot of great detail. If you have any questions, please let me know. This is Vance. Bye for now.